This is a 11-2 lecture found on page 324 of your book, Stock Subscriptions and the Balance Sheet. This lesson is going to be talking about when you can subscribe for capital stock. So sometimes corporations contract with investors to sell stock to them, and the payment will be received at a later date. So future payment for the stock may be made all at one time or in an installment plan. When you enter into this agreement with a corporation to buy the stock and pay it later, that is called subscribing for capital stock. So we need to figure out what to journalize when we sell someone a stock to pay at a later date and they subscribe to our stock. So on January 5th, we received a subscription from Daniel Herring for 2,000 shares of $10 stated value common stock for $20,000, memorandum number 21. So we're going to write the date, enter the account debited, which would be our subscriptions receivable. It's just like any other receivable account. It has a normal debit balance. And then we are going to credit the stocks that we've given out just like we credited in the last section when we actually received the money for it. So we'll enter our debit amount, we'll credit stock subscribed common, and we will credit that amount. On our balance sheet's a little bit different in a corporation when it's a newly formed corporation. We have things called intangible assets, and these are assets of non-physical nature. So anything that you cannot touch but is still an asset to your company because it has value is called an intangible asset, and you can see that here. Our organizational costs are going to go under intangible assets. Yes, it costs us money to set up our corporation, but now that money is of value to us. Other assets that are not intangible, like cash, that's something you can touch, so that's a physical asset. Subscriptions receivable will go up under our current assets. That is money that we are waiting on for that subscription that we have given out or agreed to with Daniel Herring. So our cash on hand is the original $300,000 paid by the incorporation, minus any organizational costs. So that would be that $297,600. Okay, we'll take away that $20,000 in subscriptions receivable to give us our total current assets of $317,600. We'll take away those organizational costs of $2,400, and we will add those back in. We'll add back in those organizational costs because that is a value to our company, and we're going to get back to $320,000. We need to know what to journalize in our cash receipts journal when we receive cash for the partial payment of that stock subscription. So he owes us $20,000, and he decided on March 1st that he will pay half of that subscription. So we are going to give ourselves a cash debit of $10,000, and then we will credit that subscription receivable. Remember here we debited that subscription receivable, so here we will credit it so that he only owes us half of what he did prior to that. Next, we issued stock certificate to Daniel Herring for 2,000 shares of $10 stated value common stock. So we can give him his stock certificate once his stock subscription is fully paid. So on July 1st, he paid the rest of his stock subscription, and now we are going to give him a stock certificate. So we need to give that stock subscribed back into that so we can close out that account, and then we will credit that capital stock common. That will go in our general journal. The terms to review are subscribing for capital stock and intangible assets.